Assalamualaikum and good morning to the lecturers and my friends. We are from Group 6. Today we will present about the company that we discuss analysis is Stone Master Corporation Berhad. My name is Syamil Badrulsham, S4297. Okay, for the introduction, the objective of ratio analysis today of further financial statement is the company want to do a analysis on the financial statement. This report shows that the variance of actual financial statement result on what has been the forecast in the company annual business plan. The finance team explained the reason for a significant negative change so the owner can decide whether the action to take place to correct the problem. The report also can use in the operation analysis. The company strives to further enhance the operation effective to increase production and lower operating costs. Operation analysis show how effective the corporation operates and recommend way to increase the production in the future. It also can use as a fraud risk indicator to predict fraudulent financial report. The accounting can revise the financial statement by using the base model to determine that a fraud has been done by the management or the employee for their own benefit. With the tool, it helps to predict the probability the fraud to be occurred in the financial statement. Okay, I will talk about the background of the Stone Master Corporation Berhad. It's a management investor company. Its subsidiaries are principally engaged in the manufacture and trading of marble, granite product, ceramic, tile, sanitary article and contract with it property development sector in Malaysia. As a member of Marble Associate American MIA, the company has access to the latest innovation from around the world as the idea and trend, international, renew, famous actor and design. Okay, I'll also will talk about the market. Stone, ceramic and glass industry use material or element from the earth to construct something device as wood, building, bathtub, furniture and rocket component. There are thousands of workers who work in this industry. For example, the labor report that in May 2015, about 1,850 works in the ceramic and stone foundry industry and 82,000 people work in the glass and foundry industry.
Assalamualaikum, my name is Hakimi bin Rahim. My matric number is S42277. Okay, we go to the common ratio analysis. For the first one is liquidity ratio. This current ratio, we can see the declining from 2014 to 2017, which is in 2014, the current ratio show the result is 1.0055%, while in 2015, 0.97% and 0.74% in 2016 and 2017 show the 0.58%. Declining ratio in the current ratio show the decreased ability of the company to pay current liability with their current asset. Okay, so the best performance in the current ratio is based on the 2014. So we go to the next ratio is quick ratio. Quick ratio is something like current ratio, but we just take current asset but without the inventory. So the result show slightly decrease in 2017. The rate is 0.46%. So the company cannot pay the current liability based on their financial. Okay, for the second ratio analysis is efficiency ratio. For the first one is account receivable turnover index. You can see from the data that we calculate is 2016 show the best performance of the company to collect their debt from the account receivable. While we go to the second efficiency ratio is account payable turnover index. Account payable turnover index it want to show us the ability of the company to pay back their debt. So we can see from the data is and also 2016 show the best performance of the company to pay back their debt. For the third one is inventory turnover. Inventory turnover refers to the how much company can turn their inventory to the cash. We can see in 2015 is the best year. Stockmaster Corporation Berhad turn their inventory to cash in 29 days only. The last one is asset turnover. Asset turnover, we can see the best performance in 2014, which is 163%.
Name is one Asyraf dengan Mahadi. My number Matric is S44309. Okay, I will continue for profitability ratio. For the gross margin shown that the increase of the ratio means that the company have generate more income based on their sales, but the low amount of the rate between 11.34% in 2014 and to 15.83% in 2017 means that the company just get a little gross profit. For the net profit margin, the net profit margin are negative, so that means the company have occur loss from 2014 to 2017. This means that the company's revenue cannot cover all the expenses. So that why the company generate loss in income. Also can be looked in return on equity that the company also have a negative ratio. So the shareholder of the company do not earn anything when invest on the company. Okay, next lastly for the debt to equity. The ratio shown that there is no stable number of ratio when there is increase from 2014 to 2015. Slightly increase from 2015 to 2016 and decrease drastically in 2017. The number actually means that the company had liability more than the equity. That become obligation for the company.
Assalamualaikum. My name is Ikram number Matric S44564. Okay, so for vertical analysis, we can see at the revenue at 2040 is 80,898 and it decreased to 2015 by 76,350 and decreased to 2016 by 72,303 and also decreased 270 by 54,056. Okay, so for the cost of sale, we can see it decreased drastically from 2014 to 2017. By 2014 is 72,627 and it decreased to 2017 by 45,501. And so the gross profit have a slightly increase to 2014 is 8,271 and 2017 it increased to 8,555. Okay, so for the other operating income, we plus the other operating income, that is a increase drastically from 2014 is 259 and 2017 to 1,963. Okay, so for the cost, so if the so after minus the cost, we can see there is a loss before taxation. So loss before taxation, there is a slightly huge loss to the company, which the 2014 there is 2,356 loss to an increase to 4,418 to 2017. There is a slightly there is a huge loss to the company. And then after minus the taxation, so the loss for the financial year is 3,263 to 2014 and it increased to 2017 by 4,655. Okay, so the total comprehensive loss for the financial year for 2014 is 3,440 and it increased the loss to 4,664 by 2017. That's for the vertical analysis. So we can after that, to the horizontal analysis, okay, we can see the revenue is decreased by 80,898 in 2014, decreased to 54,056 in 2017. Okay, but the gross profit, so the gross profit has a slightly increased by 2014 is 8,271 and it increased slightly to 8,555 in 2017. Alright, so for we can also after it minus by the before that we plus the other operating income is to 159 and increased drastically to 1,963, and after minus the expense, it also got the loss for the financial year. That before taxation 2,356 by 2014, and it increased the loss by 4,480 by 2017. And then after that, the total corporation loss is 3,440 in 2014, and it increased the loss by 4,664 by 2017. Thank you.
Okay, Assalamualaikum and hi, my name is Nasrul Naim bin Ahmad S42305. Okay, I'm going to present about the Stonemaster Biin M-score. Okay, Biin M-score is a mathematical model that uses financial ratios and 8 variables to identify whether a company has manipulated its earning or not. Okay, the variables are constructed from the data in the company's financial statement. The variables calculation will create an M-score to describe the degree to which earnings have been manipulated. An M-score that is greater than negative 2.22 indicates a high probability of earnings manipulation. Okay, according to the calculation, we can see that in 2017, the score for Stonemaster Berhad is negative 4.2247, and in 2016, the score is negative 3.5305, and in 2015, the score is negative 3.498. Okay, according to this score, we can say the probability of Stonemaster Corporation Berhad manipulate its earning is low, or maybe there is no manipulation at all in the company, especially in 2017, where the score is negative 4.2247 and followed by negative 3.5305 and negative 3.4948 in 2016 and 2015. It will be considered that Stonemaster Corporation Berhad had no manipulation in the financial statement because the score is lower than negative 2.22. In this case, Stonemaster Corporation Berhad can be categorized as a PN17 company, which is normally have some financial difficulties. PN17 means Practice Note 17 2005 and issued by Bursa Malaysia. In general, PN17 companies usually have some financial problems, so the company has bad financial statements, reputation, and it is not due to manipulation of creative accounting. This problem was caused by the operating management, such as fraud and error that have been done by the employee or the managers for their own benefit. Thank you.
Hello, my name is Mahadi with you. S423. Okay, for recommendation and conclusion. From our analysis by using ratio analysis and Biin model, we found that the Stonemaster Corporation Berhad has a low probability in making manipulation in the earning. And we assume that all the problems that arise in this company are a result from the mistake of the management itself. So for that reason, we recommend 3 ways that might improve the company financial statement, which are the first one is segregation of duty. Segregation of duties will help the company to increase the internal control and reduce the risk of vulnerabilities. The second one is documentation. Documentation will provide writing evidence for any transaction occurs in the company. And the third one is watching the holiday balance that might help the management to determine the loyalty of their worker. Thank you.